Hey yo, what's poppin', fool? It's been a bit, and actually no, it hasn't. I'm trying to get back into the swing of things with this YouTube thing. So welcome back to AKFX. Hope you guys have had a wonderful week so far. I'm recording this on a Thursday, well Friday if you include the time. And yeah, so I just want to get straight into these things. I don't want to waste you guys' time. So when it comes to gold, right, I'm talking about market direction. When you're looking at the weekly, you don't have any kind of structure, at least right now, that I can play off of. In my personal view, again, I'm not saying you can't see it. You can see what you want to see. But for me, I don't see any kind of structure from an SMC view that I can be like, oh, this is, very clear. For example, I'll tell you guys what I mean by very clear. If I were to observe the market structure right here, my bad, I'm all over the place. If I were to observe the market structure right around here, we got ourselves that manipulation. Very, very simple. Like it's really clear and very easy for you to see. Okay, so all you know is, okay, weekly strong high, weekly weak low, and then you're just obviously going to be expecting the daily to do a buy into your sell positions, your sell POIs. You want to be observing that liquidity. When you're looking at the strong high on the weekly, you can't really observe much detail when it comes to liquidity. So when you look at the daily, you'll be like, oh, okay, I can understand. Over here will be liquidity. This here, liquidity is going to be feeding sells in here, and you can see that's why we have a reaction. Unfortunately, it didn't actually last, but then once we took this liquidity, why this liquidity? I believe it's an SNR. I believe so. Well, no, not really. It's not really an SNR. It is liquidity. It's just liquidity. It's not really an SNR. I can't call it an SNR liquidity because it's not as clear as that. But yeah, you can see over here, we take that out, right? We have ourselves a reaction, but over here we have our POI, our main POI, and that's where price ultimately swung from. But yeah, so I just wanted to tell you that at the moment, when I'm viewing this, price appears to be in a range, right? It hasn't done nothing like this, for example. It hasn't done that. It hasn't done that. Okay, so you can't really say that it's a break. So now when we're observing this, what we can tell, however, is that price had actually failed to create a higher, my bad. Price had actually failed to create a higher high right here, okay? And this here is the weak low. Okay, so this is going to be your target for, all right, my bad, weekly market direction, right? So we have a weekly weak low. Sellers, I'm not going to tell you what to target, but you can target the weekly weak low. Simple as that. Okay. And yeah, so that's basically your premise based off of the weekly. Now, if you think it's not very clear, the understanding of liquidity, it's not very clear, right? That's perfectly fine. By the way, what I'm doing right now is just showing you guys that this low failed to create a higher high. As you can see here, we failed to break the structure, right? And thus, this becomes a weak low on the weekly. Now, that's not to say that the daily is not going to have its reactions, etc. and etc. But it is to say that based off of the macro perspective, this is indeed a weekly weak low. Okay, when we hit into the daily, all right, we can see not much of any break of structure to the upside, right? We've talked about this in the previous videos. We haven't seen any kind of something like this. We haven't seen, boom, something like this, a break it. There is nothing like that on the daily. It's fine. But we're here to cover the sells that I took. I took a sell over here. Again, every single entry will be posted onto AKFX public, which will be the first and only link in the description section below. All right. So I took a sell over here, took a sell over here, took a sell over here, another small one over here, and then I took a buy. Okay, I want to cover a little bit about supply and demand storyline in the future videos. I don't think it is 100% necessary. However, it is very important for you to know your exits at least. And so yeah, that's what I wanted to cover. But for now, let's talk about two things, and two things only: market direction and lower time frame entries, because that is the most important thing. Number one is for you to be able to enter, get yourself an entry into the market, and after that, you want to know where to exit based off of market structure and liquidity. Simple as that. So when we see price heads up over here, and then we see a shift in market structure, clearly you can see it makes absolutely no sense for us to just 100% say price is going to come down in here and for sure shoot up. It can happen. Yeah, of course, anything can happen. But based off of the odds, we need to understand that from a seller's perspective, this is telling us to sell, right? And we're trying to get this low here. Now, we've already talked about how you could have gotten this entry in the XAUUSD part 3 breakdown. So if you guys haven't watched that, I believe it's the previous video then compared to this one, right? One video before this. And yeah, you can go ahead and watch that first. I talk about how you can get this entry right here. This actually is my first entry, and I used it to actually hold my trade. Reason being, we're pretty high up in the curve, right? We're pretty high up. And if I'm trying to take this liquidity, this is going to be the entry that I want to hold, because as we come closer and closer to the bottom of the curve, if you will, if you want to call it that, you need to expect more drastic moves to happen. Okay, so yes, that is that. So yes, we would have ourselves one entry here. Why? Because we have ourselves a daily strong high, a daily weak low. That's going to be our target. And after that, we just need to pay attention to the liquidity. So at that point, just to breeze past this, because we've talked about all of this stuff in the previous video, as I've mentioned before, right? You would have this being your daily bearish QM. Very clean, very, very easy, honestly. And I just want you guys to understand what exactly it is to be paying attention to. That's it, really. Just need to understand what you are paying attention to, and what exactly you want to catch on to every single day. If the opportunity presents itself, you can take a trade. I'm not telling you to take a trade. I'm just saying, if every single day a trade opportunity presents itself to me, you can bet yourself I'm gonna take the trade every single day. Not on my planned accounts, where if I have like 500 USD and I've planned to grow it to 2K or something, right? Then I'm going to have a plan every single week. I want to get a certain amount of pips. But I'm going to have another account where I take the setups that make absolute sense to me. You know what I mean? So that's it. Just trust the strategy, trust your understanding on the market. So that would have been your first entry. Now, when we're observing this, right, we can understand what are our potential buy zones. Well, we understand, right, that we have no structure being made or structure being broken to the upside on the daily. However, what we need to understand as well is a couple of supply and demand, or if you will, smart money concepts, which is that these are all imbalances, right? This is all liquidity. You have your FVGs, your imbalances, your demand blocks, whatever, all that stuff. These bits of liquidity being filled, orders in the market being filled, and as you can see, every here, right? Basically, it's doing that. In supply and demand, they call it a rally-based rally. This one, rally-based rally. Over here, we have a drop-based rally, right? So these are all points of interest, right? So yeah, when we're looking at this, all right, these are all areas on the lower time frame that you can counter from your sells. Why do I use the word counter your sells? Because we're still bearish on the daily time frame. At least yeah, on the daily time frame, we're still bearish. So we got our first entry there, right? What do we observe? What can we observe? We understand this is the weekly, right? This is our weekly little target over here. Okay. One thing that I can see, one thing that I can pick up immediately is this bit of SNR liquidity. Now, okay, hold on. I know you guys are probably like, Avi, you're going all over the place, but what you feel to understand is that I'm not. We have already determined our bias. In fact, why don't I make it easier and write it out for you guys? Okay. Weekly, week low. Okay, so that's what we're trying to target, right? I'm building a narrative. I'm building context around the short buys, okay? Daily, bearish, because why bearish QM? There's no bullish QM, is there? So daily bearish, okay? And then we have ourselves a little small targets, right? The minor target being the H4 SNR liquidity. So you can see we already have our bias. We already have our bias based off of what? Based off of the fact, number one, right, that weekly failed to create a higher high. Daily has made me a bearish QM, right? And so I'm just riding that bearish QM. That's it. I'm just riding bearish QMs. That's all I'm doing, right? And yeah, you're not going to get the best looking bearish QMs on the daily all the time. That's why you shift to the 4 hour and the 1 hour. But you need to understand there's no sense in you looking for a buy in this inefficiency FVG or any of that sort of stuff. You know, like oh, there's liquidity here, so you can look for a buy in here. No, that just doesn't make sense, right? When it comes to your POIs, you can use things like as I've said, demand candles, high probability order blocks, etc. and etc. Again, with the POIs, it's really up to you. Some people prefer to use certain POIs, others prefer to use different kinds of POIs. One POI that I can share with you that I personally find to be extraordinarily effective would definitely have to be the hidden base plus breaker, right? Hidden base plus breaker. Here in Malaysia, we don't call it as breaker. We've never found out about a breaker. We just call it an engulfing fail. But yes, the proper term, of course, founded by ICT, of course, is the breaker. That's the proper term. That's how you properly call it. Anyway, coming back to this breaker mitigation block, you get the point. All it is basically a support and resistance area in confluence with a hidden base. And I've already told you guys what exactly a hidden base is. That's a hidden base. That's a hidden base. That's an OB. This is a hidden base that has already been mitigated from. And then there's nothing else. Here's a hidden base, right? Here's another hidden base, right? These are all selling hidden bases. Okay, just want to put that out there real quick. This is a hidden base here, but it's also with an ICT order block. Right? But I just want to say that's also a hidden base right there as well. I just want to point things out just so you guys understand, right? But yes, so let's talk about the other entries. So we have what? We have this first entry here. Can you see that we also, I'm going to get rid of this for a second. I want you guys to follow with me. We know our targets, right? We know our weekly target. We know our intermediate target. All of that's all fine and dandy, right? And besides the targets on the left, my friends, right? Let me make something for you guys. Strong high, weak low. If you guys are finding it a little bit difficult to follow the market structure, that's fine. Label it out. Really spell it out for yourself so you can see. All right. And guys, I'm never scared about, oh, what if, like, you know, one of my strong highs get taken out? Then I know. I'll show you guys something in a second. Don't worry, I'll get to it in a second. Strong high. All these weak lows are just your targets. That's all they are. They're just areas for you to take your profits at. Just want to make sure everything's good. How long is it? How long are we? 11 minutes. That's fine. Strong high H4, right? And then from here, strong high, taken that liquidity, broken the structure here, weak low down here. So of course, if you're taking a sell from the top, for example, maybe you took a sell from here. What's your target going to be? Your first target's going to be here. Then we made a new weak low. Label that weak low. Then we made a new weak low. See, you're just tracking price. Let's track price for a little bit. Come on, let's talk about it real quick. Right? Daily failure to create a higher high, weekly failure to create a higher high. How can we know in later terms that we've failed to create a higher high? Well, we have ourselves a boss. We have ourselves a boss, meaning break of structure. We have ourselves a bearish QM, SHBM, SRTO in the opposing direction. It shows unwillingness to go and break, right? That is how we can estimate or predict that, speculate, if you will, that we failed to create a higher high, and then we're going to attack that liquidity on the inside. If I'm using the correct terms, do correct me in the comment section if I'm wrong. They call that internal liquidity, if I'm not wrong, right? I don't use all these different terms. I just call it either liquidity or not, because it's all just liquidity. You have low resistance liquidity, you have high resistance liquidity, you have all sorts, internal, external, all sorts. For me, I make it very simple. Everything's just liquidity, and I view the market in terms of highs and lows that are highly probable or low probability, and that's all it is. When it's low probability, we're probably going to attack that. If it's high probability, it's probably something to sell or buy from, right? That's basically the main gist of things. I'm oversimplifying it there, but you get the point. So when I'm looking at this, we have our strong high, our weak low, right? So when price trades back into it, we sell. That's going to be our take profit area. Strong high, weak low, price comes back inside. Again, everything with the, if you will, confluence of liquidity. We'll get to that in a second, right? You know, we take our sell, we target this. I want you guys to be familiar with where exactly you're looking at for sells and where you're looking to take your profits at. Okay, now you guys may have different plans. You know, you guys may have, a little 50 pip plan or a 100 pip plan. If you're trading gold, especially, you get that pretty quick. Maybe you don't want to hold it to liquidity. You just want to hold it for pips. That's perfectly fine as well. I make money doing that on my compounding accounts. I don't care about liquidity. I don't care about SNR or a drop-based rally or whatever. I just go for pips on my compounding account, and that works really, really well for me, especially on gold. All I do it is gold, because it happens really quick. But yeah, so let me just label things out for you guys again, right? Taken that, and then we've broken right here. Okay, and then we've taken, sorry, my bad. We've taken that. Why I didn't want to mark this is because that's the liquidity inducement, right? We'll mark that as well in a second. Don't worry about it, right? And I'm gonna view this as a break of structure. Why? Because it's like a drop, it's a base, and then a rally, or like a swing point. It's just structural swing points. If you can't identify this with your own eyes, then you need to do more work on it, right? And so yeah, pretty much over here as well. Of course, that is another area. I took cells all over. Well, the main structure would be right here, wouldn't it? Yep, it would. All right, just like that. So let's get rid of these ugly marks again, right? If you guys can't focus on it, then draw it out in your own charts, okay? But you can see that we have ourselves liquidity here, right? We have ourselves liquidity here. My bad. All right, right there. Okay, and these are all inducement areas. Again, if you need to, the thing is, you guys need to be able to identify which highs, for example, in this case, because we're looking at short, so we're focused on which highs could be taken. You need to be able to identify the highs that are probably going to be, you know what I mean, taken out. For example, there's no SNR to this. I mean, it's not an SNR bit of liquidity. It's not anything like that. It's just simply a high that failed to create a lower low. You can see it's just wicking. It's just wicking. It never broke. It's not like this. Boom, broke. Right? So when price trades back into this range, you see how it broke, right? When price trades back in there, oh, you can trust it. You know, it doesn't matter if it fails or if it doesn't fail. Like this, look at this one. See? Stop hunt, break in structure, liquidity, right? Price came back, right? But it didn't last. I took the sell here and it was perfectly fine. I took my pips, 100 pips I think I got from this one, but it didn't last. But you see, it doesn't bother me at all. I'm just following my rules. All you can do in the market is just follow its footprints. That's all you can do. Follow its hints. That's all you can do. And add confluences such as liquidity. Very, very strong, very good, very powerful confluences such as liquidity. And yeah, so that's basically that. Price comes back, you know, you look for the sell. So we took a sell from here. How did I get this sell then? Let's take a look at it. Right, we can see over here we have, I believe, something on the daily. No, we don't have anything. Yeah, we do have it on the daily. So we're going to take it step by step. Very simple. Don't you worry about it. When it comes to our daily, for example, we have ourselves a couple points of interest, right? We have this daily bearish OB. Anything on the weekly? Yeah, we have ourselves this weekly imbalance close price action. So we know that's liquidity. Price can come up to fill. Liquidity on the weekly coming up to fill. That's, again, imbalance close price action. All that is, it's just, can you see this? Gap. There's an FVG, right? Imbalance close price action is just the 100% fill of the FVG. It's not no 50%. It's not that little touch. No, it's a 100% fill. Right, that's all an imbalance close price action is, or at least that's what I've been taught by my previous SMC mentors. So that's all I'm trying to reproduce for you guys and share with you guys. That's it. So yeah, don't hate the messenger, please. Okay, so over here we do have ourselves a buy sell range, or a bearish order block, excuse me, or a that's not a bearish order block on the daily. Usually people would mark it with the bodies, but the supply candle, whatever you wish to call it, it's a POI that you're going to pay attention to sell. Again, price never has to fill 100%. Again, over here, price never has to fill the 100%. All right, so let's take a look at it on the lower time frames. All we're bothered about is what kind of liquidity. Is there liquidity being taken into it? Oh, there is. Interesting. That's good to know, right? That adds a great amount of confidence to our trade. Confluence. When there is confluence, say it with me. All right, say it with me. Where there is confluence, there is confidence. Ooh, getting a little philosophical here, Avi. Hold on now. Right? So yeah. So when price hits in here, what POIs can you refine yourself to? Well, we have something like this. Why this one? Why this one, Avi? How come you ignored this? Well, why on earth would you take a sell here? Which POI do you have? Just straight from the daily? Perhaps you could. If you're taking something straight from the daily, perhaps you should wait for something like the 15-minute. But as you can see, the 15-minute, what's it doing? Pay attention to the price. Boom, 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 boom. People would be like this. Oh, look, guys, SH, BMS, RTO, liquidity. Take the sell and get destroyed. Avi, it didn't work. Boom, it goes down. Oh man, then it goes down. What you fail to understand, this isn't the high probability setup, because this the liquidity still needs to be taken, bro. This liquidity it's internal. It's all happening inside. It's low probability. You wait for this to be taken, then look at what that creates. Then just let's experiment with it, okay? Look at what that creates then. This is on the 15-minute. I haven't even refined my POI from the daily. This is a daily supply candle, a massive ass supply candle, okay? And the break of structure, sell, buy, boom. Here's your break of structure, okay? Here's your break of structure. Here's your SNR, beautiful SNR liquidity. Hope you guys are seeing that with me, right? SNR liquidity, or just you can understand that's liquidity. That's not something you and I, or at least I wouldn't, sell from. Not exactly the cleanest looking thing in the world to be selling from, so that is what we are going to identify as liquidity. So when this gets taken, then you can look for a sell. Why not? We can do that, right? So of course you can look for a sell. As you can see, we have ourselves a 30-minute order block here. 30-minute order block. Okay, 30-minute order block. We could use something like that. Alternatively, on the lower time frames, let's find out for the fun of it. Alternatively, on the lower time frames, we can't go there. You would look for a lower time frame bearish QM. Yeah, you could do something like that. Why not? That's perfectly fine over here. It doesn't look like there's anything, but there is a nice break and retest, which I told you is one of the many confirmations on lower time frame that I've shared with you guys. I've definitely shared this before. When it comes to lower time frame work, price, you can play price straight off the breaker. You can play price from the origin. Then you have the inducement versions of things. So let's jot things out just for a little bit of a refresher. That's just straight from the breaker. This one is after the breaker gets taken right above it with your stop loss above. Then you have the origin point such as this, and then you have something like this, right? And yeah, so these are the main methods of entry on a lower time frame, of course. And then you also have the infamous failure to create a lower low. Right? You have something like that as well. It takes this liquidity, this liquidity, this liquidity, and of course, yeah, you have the ones where it just plays right away. So you got to find something that is suited for you. In this case, it played right off of that breaker. So breaker, MIDI block, I don't give a damn. It's the same thing. A breaker is literally just a break and retest. It's support and resistance. That's all it is. Fancy ass terms. Anyway, coming back to this, so you can see we have ourselves our break here. Beautiful, easy to identify break. It's from a daily, mind you. I have not refined it whatsoever. If I were to refine it, I can see what? I can see we have this imbalance close here. I can see we have this imbalance close here that I can also consider as my bearish OB. H4 inside here. I haven't refined it, but you get the point, right? So these are areas that I'm just observing for price. Let's say you miss it. That's fine. That's fine. But guys, do you see how? Oh my God, it dropped. It dropped how many pips? It dropped 260 pips, Avi. Oh, I missed the move. Guess what happened the next day? Relax. Price isn't going anywhere. Relax. Guess what happened the next day? Price came back, took that liquidity, right? And what have we formed? My friends, what have we formed? We have formed the very setup that we talk about so often. Isn't that? It's just that. It's just that. What else is there? Like, it's just that. By the way, we've already covered this cell, so I'm not going to waste you guys' time. Previous video, go ahead and check it out. But yeah, it's done. So here's your entry. That's it. Or look for your lower time frame. That's it, bro. Right? In here, you can look for your lower time frame. You can have a lower. Let's take a look. Right? If you want to have an instant entry, I know someone. I'm not going to mention the person's name unless the person wants to be mentioned. But someone told me and showed me an MT4 screenshot in my DMs. Which again, if you guys are doubtful that you guys somehow think I'm lying for whatever reason, I'll ask the person permission to show you guys. They took a sell very aggressively with a small stop, right? That's why it's aggressive. They took a sell very aggressively right there with their stop loss. What is this? Breaker, hidden base. I don't care if this is a breaker, reclaimed block, mitigation block. I don't care. It's just freaking, you understand what I'm trying to say, right? Structure break, coming back with imbalance. Okay, I don't care about those other words. Please keep it simple. Don't make it stupid, please. Okay. So we have price coming in here, take a sell, stop loss above, right? Maybe because that person said, okay, I have one risk here, I have another risk at the top. Maybe that's why the person was very aggressive with the trade. Okay, cool. Whatever suits you, bro. Whatever suits you, that's fine. So when you take this entry, right? When you take this entry, your mind straight away goes to what? Hold on. Shh. What does your mind go to? Think if you were safe like me. If you were a safe trader like me, who likes to take not his profits early, but likes to take his profits at areas where it makes sense to take, it's logical to take your profits. Wouldn't you take your profits, or at least some, considering this safe TP right here? See, I genuinely have no idea why people overcomplicate this. I genuinely don't have any idea. Because some people may say, oh, Avi, you're being very choosy with your setups. You're picking the most perfect, QM setups and stuff like that to portray your examples. But how is it perfect when this has happened for over, I think 6 trades in the past week or so, if I'm not wrong, right? How is it that I can go hindsight when it's happened for 5, 6 trades, if I'm not wrong? Is this just one? This is just one of it. It's happened here. It's happened at the top. It's happened here. I'll show you the top one in a second. It's happened here. It's happened here, right? It's happened here, right? It's happened here because it's an aggressive reversal trade we're taking based off of the Powell news, right? How can it be, a hindsight or something like? By the way, I'm in all of these trades. If you're wondering, I took my profits on the sells. Obviously, when price went down here, I took my profits on the sells. But yeah, so that would be your safe TP, and then of course, right, comes your final TP right here. 1 to 11 hour. All right. top entry. How could you have taken the top entry? Well, you understand where we are. You understand where we are, right? H4 inside the daily. You understand we're in a sell zone. Let me ask you a question. You guys are complicating it, right? Let me ask you a question. Price is now here, right? Price has gone up. Oh, it's very aggressively buying. Let me ask you a question. Will you buy the trade? Will you buy the trade? Let me be honest with you. Are you a breakout trader? I don't care if you are. I'm just asking you a question. Like, would you think it makes sense with the knowledge I've given you? Would you tell me? Let me make this a little bit more realistic. No, that's great. Would you tell me honestly that you would take a buy from here? No, it doesn't make sense. You're in a sell area. You're in a sell vicinity. You should only be contemplating sells, right? And so that is how it plays. I wish I could show you the M1. Can I? No, I can't. All right, but if you guys have the paid version of TradingView, what I want you guys to do, I don't have paid version of TradingView because I don't use it to analyze anymore. Go over here. See this? I want you guys to do your own homework. Go over here and take a look. Again, I keep telling you guys this. I'm so passionate about this because it's bullshit when I hear people say this. Your news does not affect your damn trade. Okay? Simple. News does not negatively, I should say. News does not negatively affect your trade when you understand your market direction. Go here. H4 POY. H4 strong high. Okay, H4 bearish QM. Daily bearish QM, bearish market direction. H4 POI this is. I've refined it from the daily. M1 price action. And this happened during FOMC release. M1 price action. Go and check out what happened in here. I want you guys to go and see it for yourself. Check the RR for yourself as well. Right? Again, I'm not one to boast about the RR because it doesn't matter if you're taking all your profits here. Why the hell are you taking your profits here? God knows. But if you're taking all your profits here and you're leaving 0.01 to run, you're not getting paid, bro. Like, in my opinion, at least. I mean, you're getting something, but you're not getting what I would consider enough. That's me, though. That's just me. Right? So, yeah, I'm just trying to put that in perspective to you. Your RR doesn't matter if you're not paying yourself, bro. Like, you're not at logical targets. So anyway, this would be your week low, your final destination, if you will. And you can look for a counter trade if structure lines up, etc. and etc. You get the point, you get the vibe. But I'm trying to show you guys pro trend. I'm trying to show you guys how to ride the wave on a higher time frame. All right. So now you're looking at this. You're looking at this chart right now. Okay. What is the next move? What do you do next? Well, for me, it's really simple. Right now, let's say price was like this. Say price is like this right now. Oh, you've taken your profits. Okay, cool. I know something. We haven't had a break here. We have ourselves a strong high, right? Strong high. New week low. Why this one strong high? Simple. Very simple. See, after this, can you see? We have this is on the H4. This is on the H4, mind you. This is on the H1, which is this H1 is a confirmation, right? It is a confirmation for you to go and take this trade. Okay? And then when you look at this, it's just QMs on QMs. After that point, it's just QMs on QMs. Sorry. Can you see we've taken this liquidity? Right? Taken that by this guy. And then can you see we've broken the structure right here? Boom. So what's the next liquidity? Right here. And you guys are looking at me all dumb like, oh, well, it didn't last. Well, it did have the sell. I mean, it did have the sell. Am I right? Am I right? Am I right or am I right? Look at this. Take a look on the lower time frame, okay? First of all, what POI on the higher time frame? If there isn't, maybe it's not of quality for you, that's fine. Then you just don't take the trade. That's perfectly fine. But over here, is there anything of quality? No. So what are we playing off of? We're playing off of this H1. We are playing not off of a H4. We're playing off of this H1 bearish QM right here. Just this one. We're playing off of the reactions, basically. We're playing off of the reactions based off of this massive H4. See this break? This break here is a H4. Follow me, guys. Please, please, please follow me. Okay? Please, please, please follow me. This is it. This is all we're looking at. Simple. Make it very simple. Right? We've taken the liquidity, broken the structure. All right? We've come back to take this here. We've come back to take this. See how, if we were to look at it like this, see, right? We had that liquidity on the insides, right? I haven't drawn it, but you get the point. We have that liquidity on the insides. Then price goes and takes that and it dips. But here, on the lower time frame, here, on the H1, price has done price has done that. This is what's happening on the H1. So when price comes back, you take the sell. Boom. And then here's your target now. Doesn't matter if it's actually going to last or not. You get the point. You're going to have yourself your safe target. For example, here, SNR, right? Take your first target right there, right? But you get how it flows. Am I right or am I right? You get how it flows, okay? And that is great. That is important. That is very, very good. So what's the time right now? 30 minutes. Gosh, Lord have mercy on me. So you have your first sell, all right? And then, as I said, you had your little H1 over here. Little H1 area. Here would have been your first entry. Let's see. Let's say you actually took this entry. Let's say you took this entry. I'm not sure if I took it. I don't think I actually took this sell. Yeah, I didn't take it. It didn't look very interesting. Besides the liquidity. Don't get it messed up. Besides this liquidity. Okay. Let me make things very clean on the charts. Shall I do that, guys? Shall I make the things very clean on the charts? Remove all the excess, basically. Remove all the excess. So you can see we have a H1 bearish QM. This is our break. So this is our liquidity, right? When price trades back in, right, into a POI, for example, over here, it just hit a POI, right? Breaker and imbalance. And yeah, pretty much it's reacted appropriately, right? You can see that. So that's that. But yeah, so for example, over here, we had our liquidity. You can look on your lower time frame for bearish QMs on the lower time frame in here. I'm just picking a time frame, guys. That's literally all I'm doing. I'm just picking a time frame. For example, over here you can see boom, 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 boom. Price comes back down. Let's say here you took a loss. Oh, you took a loss. That's it, right? No QM made after that. Let's see. Let's assume. No, let's talk about this for a second. Let's assume over here you took your loss. Perfectly fine. Price goes up, boom, and it crashes down. Okay. Now understand, guys. Understand. Before you take your next trade, look at your higher time frame. You see how we use the M15, the M30, the H1 on this one, bearish QM, and it worked. Beautiful. Very, very reactive. Very reactive. But we're looking here, right? Can you see that break on a lower time frame, which is why I keep saying, prioritize higher time frame. Please prioritize higher time frame. Okay? H1 here, actually, you're looking M5 bearish QM, but on the H1, it failed to create a lower low. Right? Which is where the knowledge of your POIs, for example, I'll show you an example of a POI, right? I'm just giving you an example. What is this? H4 demand. Do you see how it actually lasts there? Here you're taking it off of some ICT FVG. I'm not looking down on anybody, right? They have their own rules and confluences that they add to make it high probability. I'm not looking down on anybody, but don't blindly follow. That's all I'm saying. Don't blindly follow. Okay? You see how over here we've added ourselves a POI. We have ourselves this H4 supply candle, H4 drop base drop, for example, right? And you see how it reacted. It got its thing. We'll go to the lower time frame in a second. But can you see how? This is our inducement, right? Very simple. We would not have even looked or thought of selling in here. Not have even looked or thought of doing it. Right? Why? Because, oh, there's no POI. So what I'm trying to say by this, guys, just a little bit of a lesson is, maybe for you personally, you find it's better to only take the trade, yeah, inducement, whatever, when it's in a POI. Only like this, look, it's in a POI. Like this one, inside the POI, right? Maybe for you, I'm not joking, look, it's picture perfect, right? Maybe for you, you only want to take it off of the POI. That is cool. Add that to your rules. Maybe for you, you never ever, it doesn't matter if it works or not, you never want to take a lower time frame play unless it has an inducement. You won't, maybe it's a rule you set, you won't take things like this. Even if it works, you won't take it like this. You won't take it like this. Maybe it's just a rule you create. Okay, that's why I'm trying to teach you guys different things, share with you guys different things, and then you guys go ahead and see which one works best for you. Simple as that, right? So, okay, over here, let's go lower time frame. Let's go lower time frame. This is a H4, mind you, H4. Right? So if you are confused with the M5, I'll show you guys on the M5 in a second. But if you're confused with the M5, that's fine. Go to the M1, see what pops up there. If you take a loss, take the loss on your chin. Move on. Be honest with yourself. Right? Here, boom. Very, very simple. I mean, that's it. Again, when you're taking the sell, let's say you've entered, all right? By the way, this is going to be the entry. If you want to look for a lower time frame POI or something, you can, but that's, yeah, a lower time frame POI right there. Unmitigated, fresh, bearish OB with your stop loss at the M3 strong high, M5, M3 strong high. Liquidity, this liquidity gets taken by this guy, playing, gets broken here. I don't care about the impulsivity. I don't care about none of that. The momentum, nah. It's a structure that's been broken. You want to refine it even more? Got these equal highs here, triple highs. Price takes them. Price takes them beautifully. I'm talking about refinements. If you guys wish to do those refinements, you guys want to get better RR, right? This is, I'm showing you a little bit of tips and tricks on how you can increase your RR. Okay? So that's up to you. That's up to you. You could just take it like how I showed you guys. You could just take it like this. Right? Once you have the break, this high here, just take a sell from there. That's it. You're done. Now, when you take this sell, guys, when you take this sell, what's your market direction? You took it there, by the way. What's your market direction? Strong high, weak low here. Firm. Really hold that direction firmly and understand it. Really hold that direction firmly. Understand your points of invalidation. What's your thing gonna be? There's no like this here. There's a bullish QM. There's nothing here. H1, H4. No. So just freaking take it like that. Freaking take it like that. Again, if you guys doubt me, every single entry has been posted. Okay? You see how that goes. And then your previous entry here. Again, I never tell you guys to chase RR. I never say I chase RR or anything like that. I chase, you want to know what I chase? I chase high probability setups. That's what I chase. I'll tell you what. That's what I chase. I chase high probability setups. And that's all I do. Okay? That's it. Now, go back to your H4 again. Because you know your daily is just going. It's just going. You see these? Right? These things here on the daily, right? The daily did this first, right? And you see how the daily is just doing that? Here in each of these is going to be a H4, H1 bearish QM. Inside here, H4 is going to do something like this. Boom. New one here. New one here now. New one here. Right, and then over here maybe it reacts a little bit because of the bullish QM. Right, I'm just showing you guys the way the market's movement. All right, it doesn't mean that the market factually does that. No, I'm just telling you how the market moves. So that's an approach to how you can view the market's movement. So again, now over here, what do you have? What do you have here? Right, we took the sell from here. We took the sell from here. Here, I told you guys to go and do your own self-study M1. Can you see this? Where my cursor is going? Stop hunt of this high. Stop hunt. By this guy, strong high, right? Breaking of this structure is a minor, major structure. Let me draw it. My thing is just if you can't see it without my drawing, it's going to be very tough for you, right? Boom, broken here, right? Strong high, weak low. Very simple. It's very simple. Here we've taken this liquidity. Here we've broken the structure. We wait for our inducement. Boom, boom. Take the liquidity. That is all. But people want to make it hard. People want to make it hard. I don't know why. I genuinely don't know why. Don't ask me that question, why. I genuinely do not know why people want to make it hard. I don't know if they want to sell something or what, but yeah, just that. So you can see over here, yeah, I admit solely 100%. I don't think there's any POI, is there? Oh, no, sorry. There is. There's a daily imbalance close. Okay, yeah. There is a POI. There's a POI. Okay, and alternatively, if there's no POI, you just don't take the trade. Simple as that. If it does not meet your rules, what's the commonsensical thing to do? Don't take the trade. Simple as that. You got yourself paid 1 to 11, maybe a little less than 1 to 11 because you would have taken safe TPs here. But here, very nice pay. Very, very nice pay. I'll tell you that much. Okay, so we know that if we want to take a sell based off of this QM here, see this? On the H4 again, okay? SH, BMS, right? If you want to take the sell, we know we're not going to look for a sell inside POI here. No, right? We're going to look above this because this is the liquidity. Simple as that. So you look at it. Boom. Keep it very simple. I don't care what happens in here, how many times it wants to compress, right? and then it makes its way up and down. Now let's analyze this. Right? We have our break here. Trading view is too slow for me, bro. Boom, boom. It's liquidity, and we will look for a lower time frame confirmation inside there. Simple as that. Inside here. Okay. So this is your liquidity. Sorry, I will make it like this. You guys need to be able to train your eyes. It's a very experience based thing that I'm showing you. You need to be able to train your eyes to see it. Okay. Over here, if you didn't get your lower time frame entry, then you didn't get it. No worries. It is what it is. Like, what do you want me to say about it? I'm not gonna lie and tell you, oh, bro, you could have taken from here aggressive entry from body close or something. No, I'm not gonna lie to you. If you missed it, you missed it, right? But again, look at this setup here. Will you sell this? Hold on. Freaking hell, bro. Will you sell this in here? Me? No. What the hell? What is this? Nah. Here. I'm interested. I'm interested here. I'm interested here. But I want to wait for... I don't care if it does this. That's fine. That's fine. But I want to wait this guy. Break. Retest. Boom. That's it. That's just it. Here. Break this. Boom. So you can see this setup here in this case is just break and retest, and that's it. Oops. Sorry. But yeah. So that's it. But yeah, if you want to only follow inducement, right, for your lower time frame as well, then you wouldn't have had that trade. When you're backtesting, be very honest with yourselves. Be very honest with yourself. But let's assume you took this break a trade here, breaker, whatever the thing is. You get my point, right? You get my point. All right. Over here, for example, you took this liquidity. I took this liquidity. Lower time frame was the break on the M1, I believe. I showed you guys just now. Yeah, here. Take the liquidity. Break, retest back, boom, go down. Let's say you took this trade. Where is your target going to be? Down here. Okay, I am not telling you guys this is the RR you're going to get. No, the RR you're going to get is based off of your own thinking, your own work. Sorry. Okay, again, I'm just backtesting. I'm just showing you guys where your entry points can be. That's it. That's all I'm doing. I don't want you guys, I don't want to see any comments saying, oh, you know, you're trying to be the next WWA. No, okay. Please don't ever put both our names in that set. Okay? But I'm just messing with you, okay? But yeah, so you get my point. I'm showing you guys where to be interested in an entry. That's all I'm showing you guys. Just where to be interested in an entry. And you take profit here as well, because you can see H1, H4, nothing. Go with the higher time frame. Go with that H1, H4, daily, weekly, right? Here and there, look at monthly. I barely look at monthly, but yeah, go with that higher time frame. So if you're finding your win rate is trash, it's because you're on a lower time frame. I'm telling you, try it. Try. I'm not a financial advisor. I'm just like a friend to you. I'm just telling you guys what I think. That's it. If you guys want to listen, that's great. If you don't want to listen, that's fantastic as well, right? So you can see that's going to be your target. I'm not telling you you're going to get 1 to 20, 1 to 23, 1 to 11. I'm telling you, this is a fantastic trade at top here, 1 minute time frame. Go and see. I'm telling you, this is the area you enter. This is the approach you're using. This is the direction you're following, right? This is the direction you're following. And then once price is inside here, right, you can refine it to your lower time frames, etc. For example, it's just coming up with a random example here, right? This is the internal play I told you guys about way back. I think in my first ever gold video, or I think I posted on my Instagram. Not Instagram, my Telegram. I'm not sure. Where I told you guys about being flexible with the trades, right? And if you don't want to be flexible with it, that's fine. Just don't take the trade. But you're gonna miss the trade. And if you're fine with missing the trade, that's fine. That's perfectly cool. Wait for a better, cleaner, more beautiful looking setup. That's fine. It's all up to you guys. If you want to get in on a trade to get an opportunity to make money, then there you go. Why is this liquidity? SNR. So obviously no cap. You're not going to freaking like that's the wrong way of using it. My bad. No shit. You're not going to be taking a buy. There we go. That's a better way of using it. No shit. You're not going to take a buy from here. Why? Break. This resistance here. Break. Retest. The resistance becomes support. So yeah, it's not very nice. Okay. You want to look below. So over here we have our SAZA. POI. Here, that's a bullish OB demand candle, right? We're just looking for our confirmations. Now you may be wondering, oh, it bled to the downside. Yeah, because where's our strong low? Is this our strong low? No, this is our strong low. Why? Because it took liquidity, broke structure. That's our strong low, right? So that's where our stop loss or where we expect price not to go below. So you see your price comes inside. Then today, FOMC. This is a reversal trade, mind you. Why are we looking for reversal here? Because number one, we are in the daily POI. Okay? Number two, we've taken the week low. So what? You look, you want to sell in this bearish OB? No, you want to know why they put a bearish OB here? You want to know why? I'll tell you why. Breakout traders, they see this as support. So if the support gets broken, they put their sell limit here. Not their sell limit, their sell stop here. When price comes in and takes it, they think, oh, it's going to sell stop, go down, 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 down. But no, right? Or they wait for a confirmation. Oh, look, H1 bearish engulfing confirmation at a support turn to resistance. Oh, we're going to sell, stop loss here. Boom, they take them out and falls down. Let's go and take a look at this. Firstly, over here, right, we can look for a interest. Okay, we're interested in this price over here. Right, I'm going on a lower time frame. Reason being, there isn't anything interesting here on the lower on the higher time frames. Okay, when I go to the lower time frames, I can see M1. Okay, this is a reversal trade. Okay, here is your look. There's no liquidity like yeah, FVGs and I mean, you know, the gaps in the candles. Yeah, I get that, but I'm talking about structure. Right? There's, in my opinion, there's no better confirmation or no better form of liquidity than structural liquidity. Okay? Price comes back, right, with no real structure inducement, and so then I will consider this to be my liquidity. And so your entry will be right below this here. If you think that is something realistically you will not do in the real markets, okay, no problem. I hear you. I hear you out. I hear you out. But let me ask you, is this something you would do in the markets? Is this something you would do in the markets? M15 inside daily, which refined to H1, okay? Tell me if this is something that you would realistically do. M15 bullish QM. Okay? After you, where's the boss? Where the hell is the, oh, here, sorry. I'm blind, sorry. Okay? You have your liquidity all around here. So some people will ask, oh, Avi, why are you looking for entry down here? Why not up here? Isn't this just liquidity, right? So why can't you enter here? Or why can't you enter below this? Let me ask you a question. What kind of shit RR is that? Excuse, pardon my language, pardon my French. Actually speaking English, not French, but you get the point. Why on earth would I look for a buy in here when my stop loss is going to be here? When my safe stop loss is going to be here? Doesn't make sense, right? So I would look for some kind of POI or something on a lower time frame. Like, come on. Right, I'll look for some kind of thing on a lower time frame, and if there isn't, I'll just go with the liquidity. Like, look here, there's a gap, right? Liquidity comes, takes that and goes. If you think this is something you realistically won't take in the market, okay, then so be it. I mean, you do you. That is what it is, I guess, right? But yeah, 15 minute from H1. I'm in this trade, by the way. Yeah, I mean, then look at the compression as well. I'll talk a little bit about approaches in the next coming videos. It's not that important as price action. But yeah, so over here it's just a very most definite trade, you know, over here. And again, if you guys don't believe me, all these trades are posted to my Telegram, bro. My Telegram. You understand me? Okay. And so then my throat is getting sore. It is, what's the time? 4:56. Yeah. First TP there, right? Because here, safe TP is actually here. Okay? Because we have this, taking the liquidity, breaking the structure, inducement from support, support become resistance, so we can take our profits there. 1 to 8. After that, really, just ride it. You know what I mean? Ride it in the higher time frame. You could even go. Oh man, my back. You could even go as far as this, as far as the top here. Why? Because support resistance. But of course, you don't be too ambitious with it now. Come on, don't be too ambitious with it now. But yes, so that is that indeed. And really, there isn't really much else for me to really say about this. Yeah, I mean, hope you guys understood. Hope you guys don't focus too much on these RRs, right? The RR is dependent on you, all right? But focus more on how exactly it is I'm looking for the entries. And over here, if you look for a sell, right here, for example, Remember I told you this is the SNR liquidity, which is why you take your profits here. You see how there's a reaction. Unfortunately, it didn't last. Why? Because let me tell you why, how to have a higher probability of things lasting long, okay? You have this. All right? Now let me ask you. If you're looking to buy, would you prefer to buy here, 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 or would you prefer to buy here in this area here? Or would you prefer to buy here? Obviously the bottom one, right? Especially because this is a liquidity as well, right? So similarly, if you've bought down here, I don't know, there's like a QML or something, I don't know, something like a QML or something here, right? I don't know, I don't use this stuff, but you get the point. Then, I mean, well, I don't use this stuff on gold, I use it on currency, sure. Then when you buy over here, you can actually expect it to last, because when you're looking for if you're looking for sells, right? Will you look for sells here? Will you look for sells here? Like for example, price does something like this. Will you like look for sells and boom, 100% going down? It can happen, yeah, it can happen, but it's not gonna last. Later in the future, something like this will happen. Over here, oh man, I took a loss. Over here, no man, I can make back my losses here. Make back my losses here. Palm goes through. Oh man, I think we are bullish, bro. Let's buy this. Over here, something goes up, boom, comes back down. You're like, oh shit, I was trying to buy here, because you don't you understand which areas are probable to last. I've marked a QML, breaker, origin point, right? So understand which areas are high probability and not to hold price. If you're taking it for a short term, yeah, sure. But if you're taking this for a short term, right, you would have hit your stop loss. No question about it. I'm not trying to fake you guys here. You would have hit your stop loss. That's just a fact, right? But yeah, so that's it, guys. I hope you understood. I hope you enjoyed and took something away from this. And besides that, yeah, have a wonderful day. And yeah, happy pips. See you guys, man. Happy pips. What the hell? 50 minutes. Oh, Lord. It's a very long time. Have a wonderful day, man. Peace out.